Hello traders, welcome to the TMT Trader's Edge Report for Monday, April 2nd. We had Friday has come and gone. The first quarter of 2018 is gone, and I'm going to run some numbers by you. In March, we were down 2.9%. In the first quarter of 2018, we are absolutely down 1.17%. Source is Morningstar. You can take a look at it yourself. So we are starting the first quarter, the ending of the first quarter, starting the second quarter of 2018, down on the year to date. So not so great like we had in 2017. Volatility is absolutely here to stay. We talked about on Friday's video, research video, about window dressing, thin to win, and it absolutely happened. It happens all the time. We have holiday reversal when the markets are down, and we're coming into a long holiday weekend. They usually reverse, and they're usually positive, or it could be vice versa, right? It could come into a long week of just gains, and then next thing you know, they start to sell off. But usually, it's more on a positive note before the long weekend. So we're going to talk about a lot of things. We have a lot to talk about. I'm really starting to like materials and energy sector, and I'm not talking about crude oil. I'm talking about energy stocks. They're coming into seasonal strength. You know that we talk about the seasonality trade. We look at seasonality trends. We look at behaviors as far as sentiment, fear, and greed. The CNN money gauge, which it's really nothing to trade at, but it does give you some great insight of where we are. And we're at 8, so that's an extreme fear. You can check that out yourself. CNN money gauge. You can Google that, and we're at extreme fear. So what happens in April? Well, looking at the seasonality trends in my charts, 1.4% out of the past 50 years, April has produced gains of. So April is the second strongest month of the year, second strongest of the year. And then we look at our seasonal trends in the energy sector, which a lot of these energy stocks are starting to base now. They are also one of the strongest month of the year, which is April. So I'm really liking a lot of how the connect the dots, if you will, they're starting to really shape up. Does that mean that we're going to run out and buy energy tomorrow? No. Monday morning? No. We're going to watch, and we're going to put this on a watch list. Now, crude oil and our commitment to trade reports we're going to show you next. And we're going to talk about the gold commitment to trade reports as well as gold itself and see where that's headed. We're also going to look for looking at XLU. We like XLU here, but remember, if we get a bounce, which I honestly think we're going to get a bounce, and we're going to get a pretty decent April. Obviously, news trumps the charts, geopolitical uncertainty. If it gets really crazy, all bets are off, and we go right back down again. I'm just telling you. But if we are, if the negative news is subdued, they're dying to buy this market again, dying to buy the market, and I'm telling you. I think that we have a couple of big gaps above. I'll point them out again, and it wouldn't surprise me if we fill those gaps. It would not surprise me at all one bit. Remember, a lot of the FANG stocks got clobbered, even including Tesla, which is not a FANG stock, but you know what? It's a high beta name. They're all down big, and they're going to, at one point, get a nice little relief rally, and then we would reevaluate it. But I think in the longer term, money is going to be coming out of these big cap tech sectors, and they're going to be rolling into another asset class, which is probably going to be materials and energy, at least for the second quarter. All right, so let's go right to it. We have our NYUD, right? New York Stock Exchange Advanced Decline with Volume, one of my favorites. We are now positive, which is a good sign to see. Actually, we're down 340, which is nothing, pretty much neutral. Now that based on Friday's move higher, which is nice. This is a good sign. It's not great, but it's a good sign that we did move from here -11 to -3. So internals are starting to improve. I don't have any other indicators because they really haven't gone anywhere. The McClellan oscillator is basically still neutral, as well as the NAMO, which is the McClellan oscillator for the NASDAQ, basically neutral. The bullish percent BPSPX is still negative. Stocks above the 50-day moving average jumped about 30%. So we're working the oversold and washout level areas. Now we're getting back into a neutral state in the market, which gives you really another positive for the market itself. Okay, let's take a look at the commitment to trade reports. Big move in gold, guys, to the downside. Producers, big move to the downside. Why am I saying that? Well, it kind of puts into perspective that if gold, a safe haven, and the producers, which is a smart money here, really leaning on this gold right around this area, and again, I'll show you the chart in a moment, that tells me risk on, and then gold right off. Okay, and what I mean by that means selling gold. We don't need gold in our portfolio if we're going to have a nice big move to the upside. So you see the speculators are buying up into gold now, and I just think that's a wrong move. So we'll pay attention to the gold charts in a moment. I just want to show you the commitment to trade reports. Now, in crude oil, we did get a little bit more of downside of shorting in the producers, right? We can see that here from the preview from last week, but it's right at the end. It's at the tail end here. You can see that. So at one point, you're going to see this really dramatically get reduced, and then that's going to put another bid into oil. Remember, why do I like oil stocks? I'd rather stay away from oil itself. Oil made the move. Oil stocks did not make the move. Okay, they have not moved in sync with oil itself, the commodity. So that tells me we get a risk on, and we get some sort of a dead cat bounce to fill the gaps. I think you're going to see a nice big move in oil again, but most importantly, a lot of these oil stocks. I have some names for you that I'm going to mention in a moment. Okay, now what happens if we have oil moving lower? Well, we probably will guess that the dollar will move higher, right? But really didn't get any movement from Friday. We had an inside day. We are making higher highs and higher lows now in RSI. Get a little bit more volume, but still in a negative movement of lower lows and lower highs, and still have bearish symmetry. So we really need to get back above, like somewhere around 2380 would be ideal, and start to close up there above this downtrend line. Okay, so right now not much to talk about. We did get a pop up a couple of days, but nothing really crazy to write home about in the dollar ETF. VIX, VXX, well, we have a risk-off environment, right? Then you'd want to probably look to short the VXX. I am not going to be a believer in shorting. Volatility, I like to buy. I would rather let it come in, back test this bull flag pattern here, maybe back test it, and then start to go higher and tag the first high of $62 and change. I think that's possible, but not until we get everybody long again in the market. Remember, the markets are made to fool the masses. Really important to understand that, and understand how the fear and greed aspect works. Okay, here's the TLT, and again, here's that fear trade again. Bonds are only rallying because of the fact that we have fear in the markets. Otherwise, bonds would be selling off again. I think rates are here to stay. We talked about this many times, but we'll see. This could produce a nice little shorting opportunity either here or up in here somewhere, okay? But as of right now, resistance remains at 122.93 and 125.04. Support coming at the 50-day moving average at 120.37 TLT. All right, so now let's talk about the ES. You see the little gap areas here. This is a smaller one, which is going to be the 27. Let's just round it up to 2700 to 2714, and then you got the big one here at 2840 to 52. Okay. Does it get all the way up here? No one knows really right now. But we do have a nice outside day from Thursday's low, right? We are at the 200-day moving average, okay? We are also making little pennant formations in a lot of these indices, and I have them. I showed them to you on Friday morning's video, but this one went away. Let me just put this back again. So you can see that here, a little pennant formation, or you could even say, could this be a bear flag? Sure it can. I mean, it's the way you look at it, really, right? That's a bear flag, and it's not a great bear flag, but you can deem that as a flag pattern. I'd like to see this more of a pennant, and I'd like to see it's either let it break down or break out and then follow that trend. But more than likely, I think we're going to look to break out to the upside with this little gap area that's going to need to get filled here. So the gap area resistance comes in to 2690, 2700, rounded off a nice round lot number. Support will be Thursday's low of 2591 in the ES, okay? And you can see that we're really kind of washed out here in the MACD. RSI is already starting to move up a little bit, so that's a good positive sign. NQ, right? NQ, we have a nice big area of resistance, gap area here at the 68.55 all the way down to 67.87. Okay, nice little formation here. Again, nice little pennant formation. You can see that. Well, actually, this is really not a pennant formation. Excuse me. Let me get rid of that. It changed, so I took it off. But you can see washout here in the MACD. Histogram still way below zero. We're still not making higher highs and higher lows. MACD's trying to go positive. RSI's trying to go positive. So 64, 40, 50 will remain support, and resistance will remain at 66.55. Okay, that's going to be the NQ.